Welcome, Julian.
Hi, Emily.
Let's start by going back to basics, perhaps, for investors that might be pivoting towards healthcare for the first time. So, Julian, can you give us an overview of healthcare? What does it comprise of? And perhaps can you just set the scene of the state of the global market?
I'll give it a go, Emily. If we look at it in three pillars, that's primary care, social care, which is sometimes called senior living in North America, and then acute care, which is hospitals. And then when you talk about investors, there's effectively two different platforms or buckets. You've got private equity and investors into holdco businesses where you own the going concern. And then I guess the piece that's more likely to be of interest to our audience is the real estate, what we would call fixed income leased assets. I think that certainly since the GFC, we've seen an uptick of inward investment into the global markets. And the bottom line is the pandemic absolutely crystallised and demonstrated the resilience of healthcare operators, because the reality is across those three different silos of primary care, social care and acute care, the operators have been well-versed and highly experienced in dealing with viruses for circa 30 years. Now, if you're within sector, we all knew that there was good resilience there in terms of managing infection control. And I think as other core asset classes have been exposed to fragility, and that could be hotels, leisure, or maybe it's an infrastructure play like, for example, a road toll airport, we're now starting to see funds and institutions reallocate and redistribute towards what would be considered a defensive sector, such as healthcare and education.
Okay, so defensive nature of healthcare is what's really attracting investors. Are there other kind of fundamentals, perhaps in terms of demand, supply, aging population, that might be driving investment towards the sector as well?
Absolutely. So there's two dynamics there. One is the paucity or under provision of either bed provision from a senior living care home perspective, and or a lack and paucity of future-proof medical and hospital buildings. And then to further compound that, so the UK, for example, and in actual fact, is no different really to much of Western Europe. By 2035, almost 25% of the population will be over 65. So the truth of the matter is, we've got a global crisis in terms of healthcare provision, and you can obviously appreciate when you then go into more challenging economies, South America, Africa, parts of the Asia-Pac regions, then it's going to be a massive challenge in the years to come.
So when we think about kind of very mature or prime investment markets, where are we thinking about? Is it very much US, UK?
I think that was the case 12, 15 years ago in developed Western economies. But of course, you know, what's critical is around regulation, legality, and whether or not the particular jurisdictions are of a safe haven. Now that could shape the capital in terms of, or the risk capital in terms of where they might invest it. Clearly it's relative in terms of what the returns might be. But absolutely, I think the first forays have been within either Commonwealth or Western economies.
Okay, so that's really interesting on that regulatory environment, and I suppose that's what's probably going to really drive the growth in Asia Pacific. You know, where I sit. What markets do you think will see that particular growth in this region, Jules, or anywhere else around the world?
It is a really good point. It tends to be, or has been of late, as in the last sort of 10, 15 years, investment has taken place largely in Western economies and or former colonies, Commonwealth type territories. Regulation is incredibly important. I tell you what's dissuaded a lot of capital over the last 25 years, slightly showing my age, is the reputational risk, because you know investors can lose their shirt, especially when you go up that acuity curve in terms of the registration type or client that they're potentially caring for. So that has a big impact. And a way of safeguarding that around governance would be regulatory. So from a European perspective, frankly, the moment you go east from London, ultimately to Istanbul, it becomes increasingly deregulated. So a lot of the focus for the funds has absolutely been around UK, Germany, France, and then some of the Nordic localities. North America's been obviously an incredibly an attractive proposition. That would include Canada as well. And it is esoteric and very nuanced within the APAC region. And then you've got outliers such as Australia, New Zealand, and parts of South Africa that have also attracted investment over the years.
So it sounds like really nuanced depending on each local market and which sort of subsector. And does that mean that you often see investors, new entrants come into the market by partnering with local operators to manage those nuances for them?
Absolutely. Although, I mean, that's a really good question. The short answer is yes, but I do believe that one of the trends we'll start to see over the next 15, 20 years, say, is that the senior living and care home arena will start to track the hotel arena. So you'll see the big brands of the Radissons and the Hiltons being matched within the healthcare arena with the Boopers and the Corions and so on and so forth. So it will change, but I think you're right. And certainly when you look at jurisdictions such as China, they want partners. And what they actually want, which is very much the case with the Arab Peninsula, is they want the Western infrastructure and technology and the intellectual property bolstered with the senior management team and experience to roll out those sophisticated businesses. Often they want to be the landlord, often they want to own the property. There are, of course, other complications in terms of how do you repatriate cash out of one country to another. But in essence, you're right. Partners and operators they tend to be local.
In terms of other drivers, we can't get around real estate without talking about ESG and technology and the impacts that they're having on real estate. For healthcare, I suppose it might be quite interesting for investors to look at healthcare in terms of answering a lot of ESG questions in terms of their allocation. Is that something that you're seeing?
100%. It was window dressing 5 or 6 years ago, but environmental social governance now is a prerequisite, as you well know, for a significant amount of capital, especially institutional capital, and the pension funds are making big moves into the sector. Absolutely.
And what about technology? Things like telemedicine. Is that changing the design of assets, or maybe affecting the future supply and demand, or not so much at this stage?
Look, I think the truth of the matter of this is, whilst we are property consultants, advisors, and we're talking about real estate, the reality is this is a people's-driven business. Fundamentally, it's about care. A lot of the product isn't fit for purpose. We know that, but it's really people's-driven. I can absolutely see a place for acoustic monitoring for falls. You can absolutely see the types of an Alexa in care home bedrooms or senior living rooms. So, one's mother could tune into their daughter in Singapore and see photographs of the grandchild, and there's some obvious communicative links there. But the truth is, it will always be a care-driven, people's-driven business.